Hey everyone, welcome back to Corporate Decoder, the place where we attempt to untangle the cryptic messages buried in corporate filings. Today we're looking at Vail Resorts Incorporated's latest report, and let's just say for a company that makes its money from the slopes, the numbers might surprise you. Stick around as we see what is really going on behind all the snow. Before we dive in, if you like getting the real scoop on companies without all the corporate fluff, make sure you're subscribed and have notifications turned on. And hey, we've got a growing Discord community where we break down these filings even further. So check out the link in the description below. So what we have here is Vail Resorts, or VRI as they reknown by their stock ticker MTN, giving us an update on their financial performance. This report covers the end of their fiscal year, which for them wrapped up on the 31st of July of 2025. Essentially, it is their report card for the past year, and a look at how they finished the last quarter. The most important piece of this particular filing is this press release they've attached. Think of it as the company's official summary of how they did. It contains their financial results for the last 3 months of their fiscal year, and also for the entire year. This is where we get the key numbers that tell us if Vail Resorts had a good year on the business front, or if perhaps some of their ski resorts are facing some tough conditions off the slopes. Now, we do not have the full financial tables directly in this document, but the press release they've attached is packed with the most crucial figures. Company S like Vail Resorts with operations across the globe are constantly dealing with a lot of moving parts. They have their ski resorts, their lodging, their dining, and even things like golf courses. So understanding their financial health, especially after a year that likely saw shifts in travel and spending habits, is key to seeing where they re-headed. When we look at the overall numbers for the fiscal year 2025, we're going to be paying close attention to how their revenue stacks up against the previous year. Did they bring in more money from ticket sales, from people staying at their hotels, or from the restaurants at their resorts? And just as importantly, what did it cost them to make that money? We need to see their expenses to understand their actual profit. We'll also be looking for what they call earnings per share, or EPs. This is a really important number because it tells you how much profit the company made for each share of its stock. If EPS is going up, it generally means the company is becoming more profitable for its shareholders. Conversely, a drop in EPs can be a red flag. Let's imagine a scenario where their revenue from lift tickets went up by, say, 10%, which sounds great, but if their operating costs, like keeping the ski lifts running, snow, making and paying staff, went up by 15%, then they actually made less profit. This is the kind of detail we're trying to uncover. It's not just about earning more, it's about earning more efficiently. This filing also includes what is called an interactive data file. This is a digital format designed for computers to read and process financial information more easily. While it's not something you'd typically read like a story, it's crucial for financial analysts and data providers. It acts like a standardized language for company financials, making it easier to compare companies and to analyze trends. Think of it as the digital backbone supporting the financial story we are about to hear from the press release. The company's main way of raising money and how people invest in them is through their common stock. This is registered on the New York Stock Exchange under the ticker symbol MTN. This means that their stock is readily available for anyone to buy and sell, and its price can fluctuate based on how the market perceives the company's performance and future prospects. When we see their earnings report, it directly influences how investors feel about holding onto or buying more of this common stock. Finally, the report is signed off by Angela A. Korch, who holds a very important title, Executive Vice President and Chief Financial Officer. Her signature here means she is attesting to the accuracy of the information presented in this filing. As the CFO, she is directly responsible for the company, S Finances, so her endorsement carries significant weight. It shows that the company leadership stands behind these reported numbers. Now, let us shift our focus to what these numbers likely reveal about Vail Resorts, current situation, and its future. Based on what is usually found in these end-of-year reports, we're re-looking for trends. For example, if Vail Resorts has been investing heavily in new lifts or expanding their resort properties, their expenses might be higher in the short term, but this could be a strategic move to attract more skiers and snowboarders in the long run, leading to increased revenue down the line. We need to see if the investments are paying off or if they are becoming a drain on profitability. Sometimes companies might show strong revenue growth but also a rise in debt. This would be a point of concern as too much debt can make a company vulnerable, especially if their income streams falter. We'd be looking for their debt to equity ratio, although that specific number might be buried in the full financial statements. What's important to grasp is whether the company is growing healthily or if it's borrowing its way to growth, which is a riskier strategy. Considering external factors like weather patterns impacting ski season length and intensity, or even broader economic trends affecting discretionary spending on things like vacations, Vail Resorts operates in a dynamic environment. A strong financial report in this context would demonstrate resilience and effective management. A weaker one would suggest they are struggling to navigate these challenges. Looking at this filing, the main story is their performance for the fiscal year ending July 2025. The attached press release is the core of this report, detailing their revenue, costs, and profits. It is crucial for investors to understand if the company is growing as expected, especially given it is in the leisure and hospitality sector, which can be sensitive to economic downturns and even the weather. While we don't have the granular detail of their balance sheet or cash flow statements directly here, the press release should give us a clear picture of their bottom line. In conclusion, Vail Resorts, incorporated through this filing, is providing the market with its vital financial health update. They are expected to show how they've performed financially throughout the year. For us, the takeaway is to see if the company is on a solid path with increasing profits and sustainable growth, or if there are hidden challenges that might affect its future. We need to assess if their strategy of expanding and improving their resorts is translating into better financial results. Alright, that is our breakdown of Vail Resorts Incorporated's latest filing. What is your take on these numbers and what they signal for the company? As future, do you think they are hitting the slopes with strong financial performance, or are they facing an uphill battle? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.